A mortgage payment is one of the most important aspects of a home purchase. Calculating correctly and understanding all the factors that go into your monthly payment amount is essential. Your monthly mortgage payment will determine how much house you can afford and your total budget each month. Figuring out how to determine your mortgage payment for the first time can seem daunting, but it's not that difficult. Hello everyone, welcome to Success Wisdom. If you are new to this channel, do like and subscribe to this channel. In this video, we will talk about how to determine your mortgage payment for the first time. This can be confusing for many people, but I will break it down step by step and make it easy for you to understand. So sit back, relax, and let me help you figure out your mortgage payment. What is a mortgage and what are the different types of mortgages available to you? A mortgage is a loan that is used to purchase a home. The home acts as collateral for the loan, which means that if you default on the loan, the lender can foreclose on your home. There are many different types of mortgages available, and the type of mortgage you choose will impact your monthly payments, interest rate, and other loan terms. Fixed-rate mortgages have interest rates that remain the same for the life of the loan. This type of mortgage is a good option if you want predictable monthly payments. Adjustable rate mortgages or ARMs have interest rates that can change over time. The initial interest rate is usually lower than a fixed-rate mortgage, but it can increase or decrease over the life of the loan. ARMs or ARMs are a good option if you expect your income to increase over time, or if you plan on selling your home before the interest rate adjusts. Government-backed mortgages are backed by the federal government and typically have more flexible guidelines than conventional loans. Some standard government-backed mortgages include FHA, VA, and USDA loans. Mortgages are a long-term commitment, and the type of mortgage you choose will impact your finances for years to come. Be sure to shop around and compare different mortgages before making a decision. The importance of getting pre-approved for a mortgage. Getting pre-approved for a mortgage is integral to the home buying process. It gives you an idea of how much you can afford to spend on a home and helps narrow your search to properties within your budget. When you're getting pre-approved for a mortgage, the lender will look at your financial history and credit score to determine how much they're willing to lend you. They'll also consider your employment history, income, debts, and other factors that may impact your ability to repay the loan. What factors influence your mortgage payment amount? There are a few different factors that can influence your monthly mortgage payment amount. Here are some of them. Number 1. The size of your down payment. The larger your down payment, the lower your monthly payments will be. This is because you'll be borrowing less money from the lender and you'll have more equity in your home. Number 2. The interest rate. The interest rate on your mortgage will affect your monthly payments. A higher interest rate will result in higher payments, while a lower interest rate will result in lower payments. Number 3. The term of the loan. The time of your loan will also affect your monthly payments. A shorter loan term will have higher payments because you'll pay off the loan balance more quickly. A longer loan term will have lower payments because you'll pay off the loan balance over an extended period. Number 4. The type of loan. There are different types of home loans available, each with its terms and conditions. Some loans, such as adjustable rate mortgages, can have higher interest rates that fluctuate over time. This can make your monthly payments higher or lower depending on the current interest rate. Number 5. Your credit score. Your credit score is a factor that lenders use to determine your interest rate. A good credit score makes you more likely to qualify for a lower interest rate. This can save you money on your monthly payments. Number 6. Your income and debts. Lenders will also consider your income and debts when determining your monthly payment amount. If you have a high income and low debts, you're more likely to qualify for a lower interest rate and a higher loan amount. This can increase your monthly payments. Number 7. The type of property. The type of property you're buying will also influence your monthly payments. A larger or more expensive home usually has higher payments than a smaller or cheaper home. Number 8. The location of the property. Properties in more expensive areas will usually have higher payments than properties in less expensive areas. The location of the property can also affect your monthly payments. If you like this video, don't forget to like and subscribe to the channel. Determining your mortgage payment can be confusing when you're a first-time home buyer. There are a lot of factors to consider, and it's difficult to know where to start. So, how to determine your mortgage payment? Here are a few things to keep in mind when you're trying to calculate your mortgage payment. First, the size of your down payment will affect your monthly payments. The larger your down payment, the less you'll have to finance and your monthly payments will be lower. Second, your interest rate will also affect how much you pay each month. A higher interest rate means higher monthly payments, so shopping around for the best rate is essential. Third, the term of your loan will also affect your monthly payments. A shorter loan term will mean higher monthly payments, but you'll pay less interest over the life of the loan. Fourth, your loan type will also affect your monthly payments. A fixed-rate mortgage has the same interest rate for the life of the loan, so your monthly payments will never change. On the other hand, an adjustable-rate mortgage can start with a lower interest rate but then fluctuate over time. Fifth, your credit score will play a role in the interest rate you're offered. The higher your credit score, the lower your interest rate will be. Sixth, the location of the property you're purchasing will also affect your monthly payments. Properties in high-price areas will have higher monthly payments than those in cheaper areas. Seventh, the type of property you're buying will also affect your monthly payments. A single-family home will typically have lower monthly payments than a multi-unit property. Finally, the type of mortgage you choose will also affect your monthly payments. A conventional mortgage typically has lower interest rates than an FHA or VA mortgage. Keep these things in mind when you're trying to calculate your monthly mortgage payment. Figuring out how to determine your mortgage payment for the first time can seem daunting, but it doesn't have to be. By understanding this video about mortgages and following the simple steps in this article, you'll be able to calculate what you can afford and start finding your dream home. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like, subscribe to the channel, and comment below. Thank you and goodbye.